I got this. I got the charts all nice and solid. Got a great thing going on here, and I start the wrong stream. If it's not one thing, it's another. Just taking a look here again. It is Tuesday, July 27th. I'm very embarrassed about that. I do apologize. We have the FOMC meeting beginning this morning. 7:30. The durable goods orders numbers came out. All of them missed, but there were some positive hints from the past. There were all of the numbers were revised to the upside. Case Shiller and FHFA housing prices came out a little higher than expected, showing possibly some inflationary pressures, as we're seeing plenty of those. And the consumer confidence number due out at 9 o'clock this morning. Yes, it's the forecast. I'm John Hoagland. Thanks for joining me and being patient and trusting me with your time. I admit it, I'm not the sharpest tool in the shed. And again, this morning I started the wrong stream, so my deepest apologies. As far as news this morning, we should be aware that China had a 4% drop in stock prices last night. Lots of fear of increasing regulatory measures on technology companies in China. Possible muted session today in the U.S. with the FOMC due out tomorrow. We have Apple, Alphabet, and Microsoft due out after the close today. We've already had UPS and Raytheon and GE beat expectations this morning overall. The earnings largely positive. You're going to be paying a lot more for your latte. It's coffee at 7-year highs. Approximately 11% of the growing region for coffee in Brazil has been hit by frost. Crude prices continued just to float, just kind of managing supply versus demand and the unknowns there. As always, make sure you like, share, comment, question, feedback, and heckling are always welcome. I certainly deserve some heckling after this morning. Make sure you subscribe to our YouTube channel. VIX up 7% this morning, still below 20 at 18.47. Dollar index down slightly, 92.53. The 10-year yield holding steady at 1.25%. As always, I got to come back and say hello to everybody. Jorg, you win the prize this morning. You were first one in the room. Tone, Murph, good morning. Another day to make the best out of life. Absolutely. And I tend to do that too. I hit send before I proofread from time to time. It happens to all of us. Brian, good morning. Caesar, Jim, Bill, John, Jason, Laura, Vince, Terrain, Mike, the chef, Drones over Texas, Greg H. Trading Research, good morning. Jerry is awake, apparently John is not. Kim Kinsner, James Sajor, Brett, Ryan, Cyril, Ravenwise, good morning. Fred, I saw your question, and we're going to take a look at that as we get into the charts here. Yes, when we open in range and value, better trade locations tend to come as the day goes on. Ainge, Polymath, good morning. The immortal words of Luke from Two Live Crew, don't stop, get it, get it. Caesar asking where I am. Everybody is okay, Drones over Texas. Caesar, yes, we're okay. Good morning, Edelson. Ryan, Murph. All right. Yes, everything's fine, Murph. Apologize for that. Fred, 3 scenarios for crude, continuing balance, sell off, targeting the gap from 67.47 to 68.19. 3 rally to test resistance at 75.24. We're going to take a look at that here shortly. Fred, Alamin, Ocean Blue. Yes, here I am. George, Alim, Ravenwise. All right, we've got about 15 minutes. We're going to see if we can't cram this all in here before the equity open. Ocean Blue, stacking bananas. Good morning. All of us. I'm not the sharpest in the shed, that's for sure. Just warned on persistent inflation. IMF just warned. Yes, perhaps not transient, but persistent, right? April, good morning. Good morning, and good morning, Khalid. So let's jump into the charts here. I was really just kind of getting into the crude oil when I noticed that I was in the wrong feed here. So Now that we've got things straightened out, let's take a good look, shall we? All right. So now that I've got the charts steady, I messed something else up. Well, that's all right. We're all humans, right? Day 3 in an overall balance. Fourth day of increasing open interest, adding 15,000 yesterday. It's awaiting more information, as Fred has said here. But it does seem to be building some energy. That increased open interest should increase the energy when something changes. Go to the 30. Here's what Fred was talking about, and we saw it yesterday as well. Here's yesterday's area of value. Here's where we opened in value. When we look at what happened yesterday, we opened high of value, but still pretty close to value. No big change in the perception of value of a barrel of crude oil. And this actually proved Fred to be correct. The best trade locations came after about the first hour and a half. We traded up to the overnight high. We traded all the way back, not to, but to a consolidation area that was part of the way down on the overnight low. So the market proved yesterday again that opening in range and value, being patient and looking for better trade locations as the day goes on, can often pay. Fred had a comment on there on what he was looking for as far as, areas of interest. There's a gap down below, which would be a considerable sell-off. And then looking for a rally to resistance at 75.24. But we've got to get out of this range first. When we take a look at this, we've got relatively solid lows here in this area of balance. We've got certainly some solid areas of highs up here in this area of balance. So try and stay patient. Look for your opportunities when things change. Not expecting big changes in most of these markets today as of we've already got most of our economic information out, and we are waiting for the FOMC tomorrow. That should be a very interesting press conference after the release. E-mini S&Ps. Open interest continues to build. We added 16,000. The market seems to be, intent on continuing its move to the upside. We had a new all-time high in the regular trading hour session yesterday, unable to take that out last night in the regular trading hour session. I find that to be interesting. With the FOMC meeting, again, we're kind of looking at a possible muted activity type of day. Keep your eye on the economic releases. We're still waiting for the consumer confidence at 9 o'clock Central, which there may be a lot of eyeballs on that. Let's take a look here in the 30-minute chart. We had another late spike yesterday. The market put in the high last night in the last 30 minutes. It closed up there. It did not, however, open in the late spike or above. It seems to be showing rejection of higher pricing by opening below the late spike. We had a move in the overnight. Of course, that was last night. This morning, we have a move right back to the base of the late spike, which it is treated as resistance. Now, nobody knows what's going to happen, but this is a little bit of a change in personality. The rules for the late spike. Opening inside or above the late spike. The best case scenario for upside continuation is gapping above a late spike. The second best is opening in the spike, finding an opportunity at the base of the spike, which should hold, and then we can see the market move higher. The weakest scenario is what we've got going on today. We're opening below the late spike. We're in range and value, but the fact that we're opening below the late spike is important information for us today. Nobody knows what's going to happen. We know how resilient these equities markets can be. We're, not saying that the high is in, but this is just one of the nuances that say, it might be interesting to see if I can find an opportunity to sell a strength today. always looking for good risk management, always looking for some sort of structure we can lean on. The market already kind of moving towards the downside. We've got about 9 minutes left here before the regular trading hour opening. Okay. Here's when the China kind of fell apart last night, just about the European Open. We didn't go ballistic downside. We recovered. We have perhaps some overnight shorts, but possibly some reconciliation from that. It's going to be an interesting trading day. My thought is, if we are going to be basing anything on the late spike, the fact that we were unable to open, which we're not open yet, anything can happen, in or above the late spike, this is the weakest of the scenarios. The NASDAQ, no late spike. We put in another all-time high. We did not put another all-time high in the overnight session. So the regular trading hour traders can keep that pride that they put in the all-time high in the regular trading hour session. We lost open interest yesterday in the NASDAQ. I find that to be very interesting. We put in an all-time high and we lose open interest. Money is not coming in to the upside here in the NASDAQ just by looking at that, losing 3,400 in open interest on a new high. If this market were really maintaining a healthy auction to the upside, we would be looking at higher volume and an increase in open interest. Note that. Big tech earnings likely to be again muted. We've got some of the FANG stocks coming out after the close today. We also have the FOMC meeting. Keep your expectations reasonable. Here we are. 30-minute. Come on. So last week's high, that pink line, the all-time high, just peeking up above it, finding resistance at last week's high and the all-time high now, opening probably inside range and value, no overnight inventory. This is a high target area up here. It figures that it's going to test that area before the regular trading hour open. It's just going to further complicate things for us. Again, opening in range and value. I'm always thinking in risk first. If I get the opportunity to look for a cheap short up here, I'm probably going to take it. This looks like a high target area. There's probably some fish up here. Whether that fish is to the downside or a continuation to the upside, yet to be known. Gold. Okay, I'm racing the clock here. I got 6 minutes. Same. It is rollover. We should probably be trading December gold tomorrow. December, all the way from August to December. So far, the volume is still greater in August. I'm sticking with August today if I do trade gold. Overall, we added open interest yesterday. We've started to kind of trend to an upside, a building of open interest. The last 5 sessions, we've added open interest. It's 3,200 added yesterday. We're range bound. What's with the open interest increases? We're not really going anywhere. That's going to build volume for when we do come into a situation where we're going to see a move. Short time frame controlled is what I'm looking at here. 30-minute chart. Okay, the opening range, initially the low of the session, no longer. The market had a good spike to the upside before the open. The numbers came out. Gold opened, left the opening range, the low of the session, leaked to the upside. Didn't really bring any momentum. I don't think it was a very good idea, even though it was outside of value from yesterday to look for this opening range trade today. Really just kind of hanging around. Looking like, is it going to reaccept value from yesterday and head lower? Is it going to reject and drift to the upside? A lot of this is short time frame controls. So remember, shorter time frame levels will be important and probably more respected until they're not. I don't see a lot of of information or visuals up here until we get to the upper extreme of this 5-day balance that we've been in. We do have the point of control from yesterday that remains unchecked today. That could also be an important level if we've gotten a little bit too long in short time frame, bringing price back to settlement, which is right next to point of control. Try and stay patient here. This market is range bound. It's almost in a random walk. We're seeing yesterday's high, value high from the previous day. Yesterday's low, pretty close to the low of the previous day. This day's high, pretty close to point of control. This day's low, very close to, well, it looked a little bit lower here, but, basically taking a really good look at the weekly kickoff low and then finding a rejection. Look for short time frame levels. The euro, as gold is the euro. We've had a 5-day balance here, and we are actually at risk of changing a little bit of market state here. If we were to look at a trend line across these, we're at risk of a continuation to the upside here. We lost 3,100 in open interest off the lows yesterday. A little bit of short covering, perhaps. Volume low. Looking like we may usurp that volume today, especially if we do become directional to the upside. Largely range bound, short time frame controlled, but I think we're closer to a change in that in the euro than we are in gold. Take a look at the 30-minute. All right. Here's the low of the opening range in the euro. It remains the low of the session, I believe. Yes, it does. It remains the low of the session. So, looking at the bigger picture with the daily thinking, this looks like there could be a change in market state here. Even though the market was inside of the value area from yesterday, this was probably a better idea if the opening range was going to remain the low of the session to take that. Number one, it's a very cheap trade. Very cheap. And number two, with the bigger picture and the drop in open interest on the up move yesterday, with some short covering coming in here, that does take buying power out of the marketplace, but it does say that some of the opinions to the downside are softening, and we may see a move to the upside, and it may be starting here today. Opening range low, 118.21.5. We had a dip down. We basically removed all overnight shorts by the time we'd opened because price came all the way back up to settlement. So opening, the overnight inventory was not really important. Let's take a quick look now into the 10-year. 5 days in balance. 1, 2, 3, 4, 5. We kind of put this up here yesterday in looking at the fact that it seems to be closing in on itself, and a move is likely to happen sometime soon. Open interest was moot yesterday, adding 8,000 in open interest, and then kind of a down day. Is that new shorts? If it is, those new shorts are getting squeezed right now. This previous weekly kickoff level here is proving to be it was magnetic last week, now proving to perhaps be a launching point at some point. Looks like it's where we started to move this market higher after last night. But again, 1, 2, 3, 4, 1, 2, 3, 4, 5, 5 days in balance. Very even areas of excess on either side of this. So focus on opportunities up here near this naked point of control, or opportunities here near last week's low for any bigger opportunities. Anything in the middle here, if you manage to catch a 2-to-1 reward over risk, I'd think about taking it, because the market has really kind of settled in here for a mid-summer's nap, if you will. Okay. Frederico, why December directly? Because gold is one of those contracts that it has, kind of months that don't get much activity. They're there for, probably some major participants if they're looking for. I don't know. They just don't trade much. We used to call them. Well, we used to call them bastard months in the grains because there's certain months that just don't get a lot of action. Although you can take delivery on them during those periods of time. So all the way to December. All right, so let's take our deep breath. We've got equities opening about a minute ago. We got consumer confidence out. Stay humble and grateful today. We'll see you for the coach's playbook today, and we'll also see Dan with the market recap at the end of the day today. Sorry about the issues today. Tomorrow we'll have a very smooth market forecast. I promise. Trade well. Get out there and profit. We'll see you later.